Yesterday, cheap oil sent the Aussie market to a 9-week high. Today, oil got even cheaper, and the market fell. Same input, opposite result. One variable changed. A man named Kevin Warsh. Let's break it down. Warsh runs the US Federal Reserve, and last night was his first meeting. He left rates unchanged, but the Fed also publishes a dot plot, a chart where every official marks where they think rates are heading. This time, 9 of the 18 pointed up, meaning half the most powerful money people on earth think the next move is a hike. Markets reacted in minutes. Before the meeting, a hike by October was a coin flip. After, the odds jumped to about 60%. Traders started treating it as the likely path, with the dots pointing to even more tightening into 2027. Warsh didn't actually do anything, but in markets, a credible threat is the event. The S&P 500 fell 1.2% on words alone. Here's the damage. The ASX 200 fell 0.6% to 8,911, straight off yesterday's high. The S&P 500 down 1.2. The Aussie dollar broke below 70 US cents overnight, and Brent crude slipped to $77 as the Iran peace deal was finally signed. So why does an American meeting sink an Australian market? Higher US rates are a magnet. Global money flows to wherever the safe return is highest, the US dollar, and everything else gets left behind. The Aussie dollar broke below 70 US cents. Your Bali trip just got pricier. You're welcome. And here's the irony. Oil is in free fall. Brent hit $77 as the Iran peace deal got signed. Cheaper oil means lower inflation, which should mean lower rates and happy stocks. The Fed read that memo and binned it. When a central bank wants to look tough, cheap petrol doesn't get a vote. So who lived and who died when rates rose? Dying. Gold and tech. Gold pays you nothing, so when bonds suddenly pay more, a rock that just sits there loses its appeal. Ora Banda down 7.5%, and tech is a bet on profits years away, worth less when rates rise. WiseTech and Xero, both up yesterday, both down around 4. The lone winner, Retirement Village Builder Lifestyle Communities, up almost 10% on a sales rebound. The math doesn't care about your feelings. Then there's Ironore, our biggest export, down to $99, the lowest since February. The reason? China started about 25% fewer construction projects than a year ago. Less building, less steel, less demand for our dirt. BHP and Fortescue both slid. And in the day's most on-brand deal, Goodman Group bought nearly $2 billion of industrial land for AI data centers. Quietly, the AI boom has stopped being about chips and become a fight over land and electricity. Remember that one. One for home. The government walked back parts of its plan to change capital gains, tax and trusts, scrapping the new trust tax and widening the small business carve-outs, after the finance industry spent weeks calling the policy broken. Sometimes the system works, allegedly. Bottom line, it's a tug of war. Cheap oil pulling inflation down, a new Fed chair yanking rate expectations up. Today, the Fed won. Tomorrow depends on whether that Middle East oil actually starts flowing. That's your end of day. Oil's cheap, money's expensive, and the new guy at the Fed is going to be a problem. Subscribe. We do this every day until it makes sense.